Okay, welcome back, members, Clueless 8 members, ladies and gentlemen. So let's look at some short-term stuff as to how we can take advantage of what's coming in front of us right now. Because regardless of anything, there are market risks out there which haven't fully diminished. Market risks never diminish, period. All right, so you have to work from within the framework. As I like to say, I like to post many times, there are no perfect moments. Yes, there was one perfect moment recently, and that was that 100,000 plus point drop on the Dow Jones, which we went in and bought. So that was a perfect moment to make some serious money because the biggest rallies happen within 24 to 48 hours. I don't need to tell you that. I've proven that over and over and over again. When fear is that intense, that the trading room, that the website chat room is dead silent. Yet I've been posting uh my trades alerts were both on the short and long side. Okay, all that is posted for everyone to see, and then telling people to go out there and trade the market and not just buy the BTFMD and whatever garbage that they talk about in other forums, but technically play what's in front of the market. And please review every single one of my posts from that from the day that the market crashed and then reversed back up, still ending the down about 500 or something. Um, you'll be amazed to see how precise my work is. So let's take a quick look on the shorter term picture for traders. This is where we are right now. This is a classic dragon bullish formation where you have major zigzags. You create a bottom here, and then that slips. That's known as the market structure low. All this is taught in the coaching sessions. All right. Now, in hindsight, it's easier to see while you're in the middle of that and you're looking at your P&L if you're trading and not hiding under the couch. Okay. That's not a great trading strategy, by the way. Then you know exactly what I'm talking about. But it's good to study this stuff as I'm walking you through it so you know what to expect. Volatility is something unquantifiable, but it can be managed. That's the whole purpose of my service. Conquer volatility. So anyway, without getting too much into the philosophical part of it, let's look at this. So this is what's going on. So at this point, we're up here in a broader way. We had a we created a we have created a nice triple bottom, if you want to look at it that way. And at this point, we're in the top of the Darvas box. I use the Darvas for intraday stuff because it's really, really accurate and it's automatically populated. Thinkorswim has it. I'm sure other platforms have it too. And at this point, if you want to look to see where we're going, um, let me clean this chart out. I would say, bear with me one second. Okay, so we have this in play here, right? So you can call it the inverse head and shoulder, the head being here. This was the left shoulder. This was the right shoulder, the big move up. Now we have a bull flag in formation. This is a bull flag. You can see that. So at this point, it is possible for the markets to go and hit the 200-day moving average. This is an hourly chart, mind you, at around 2000. Now, when people say 2000 means that's another 320 points or so, but hey, you know, my favorite line that I keep on reminding everyone that every action has an equal and opposite reaction, and that the violence to the downside will met with violence to the upside. The key question you have to ask yourself as traders and investors: do you know how to manage that? Because I'll tell you straight out, a good number of you out there are not making money of this market. And I'd like to remind everyone straight out, there's no fluff here. This is the real deal, okay? People who did not make money over the last couple of days or even yesterday, where a blow by blow I showed the market up, sold it, shorted it, bought it right at the lows, then they really need to re-examine what they're doing. Because if your mental fear is that bad, that it freezes you every single time these type of actions are happening. This is not the first time. I started my service on April 15, 2014. It was a terrible day in the market. Markets were collapsing, technically went in there, bang, within a matter of the market turning within an hour. Prior to that, an hour before, a little bit early, I called the shots and bought the market. And you guys can go see it. Listen to my first video cast. It's all there. Listen to my first video cast. So I'm not going out there and bragging things here. I'm only human, but I'm a much faster learner. And I go ahead and apply the things that I've learned over the years that I'm trying to teach other people to do. If you don't have the mental capacity and discipline to learn, you'll never make it. I'm just letting you guys know you never make it, because we're not sugarcoating here. We're not going out there and saying we're going to spoon feed you, because you can't spoon feed markets. All right, especially volatility markets. Some people come and tell me, hey, yeah, you know, I need something, I need a service where, you know, tell me exactly when to get in and exactly when to get out. It doesn't work like that. Okay? Because if you're going to do that, I can give you tons of trades where you can scalp a dollar or two out every couple of hours. But that's not what I do. I'm showing you how to make the real money. I'm showing you entry points. I'm showing you exit points overall based on overbought, oversold conditions and other parameters and all these different variables that I use. I'm giving you a realistic analysis of the news flow that's coming out, because I truly love, my passion is macro global economics, domestic politics, you name it. I'll go head to head with anybody out there on these things. So let's go back to the technicals here. So you really have to build your own house. And I'm going to provide you the most precision tools and a manual. After that, don't expect to be walked around and just, you know, having my service run your book. That's your job, not mine. So I just want to be very clear about that. So here we are, bull flag. So at this point, I would not be surprised if by tomorrow we are up towards the top of the bull flag is 1980. So ES 1980 would be roughly about another 20 points. So give or take another 25 points, another 150 points from here is something that is doable. Because at this point, for the market to totally break down, okay, and anything can happen, is a low probability. Remember, game theory is basically assessing a range of probabilities, picking the ones which have the highest chance of success. Okay, so range of different probabilities, range of different scenarios, and you try to figure out. That's what game theory is all about. All right, and that's what I try to do every day. So this is this is a low probability event. The higher probability event is that we basically get up to 1980, and we could have an overshoot to complete this pattern up to the 2000 level or so on the E-minis, which is roughly around 2006 or so on the S&P. All right, so this would be a pattern symmetry completion. This would be a pattern symmetry completion, which is something doable. Now, in between, and this is an hourly chart, we could have quick little pullbacks. We are overbought right now, no question about it, on a short-term basis. And the resets on the indicators, which I show all the time, and you have to follow it. I've taught people how to basically monitor this for maximum benefit. This is an hourly chart here, obviously. So let's look at this picture. You can see here we're starting to get overbought. You get about 100. A couple of things can happen. We can have a quick reset pullback. So drop from 19, from the upper end of the Darvas, let's say 1965, down quickly to 1938. So that's 30 points or so. That's roughly about 200 points in the Dow. It doesn't change anything. That's the key thing here. You can also go ahead and draw an uptrend line. You can do this. Okay, you can draw multiple ones. And if you draw this broader channel, and why is it so important that I'm covering the markets? Because the markets are what you trade in. I mean, I give enough stock ideas out there for people to make money. So I'm not worried about that. I want to show the bigger picture so you guys are prepared for what's coming in front of you. So here's this broad channel. If you break out over 1976, 1978 on the E-minis, then that's roughly about 19 that's roughly about, let's see here, the S&P closed at 1940, 20 points. Yeah, so that's roughly about like 1983, 1985. If you break above that on the S&P, and of course I'll be updating the charts along the way. So if you break up over 1985 or so on the S&P, that's roughly about another 100 some points from here. You're going to hit 2000. No questions asked. Let's take a look at the 4-hour chart. And the 4-hour chart is a little troubling. And this is the reason why I am always ahead of the game, or most of the time. The 4-hour chart is indicating that we can move sideways and stay overbought for the next couple of days till we hit those levels, or we need a quick reset. That 4-hour chart or the 240-minute chart is extremely important. It is certainly showing you severe overbought conditions. Now, severe overbought conditions can stay overbought, especially on a reflex bounce, just the way it stayed oversold, as you can clearly see here throughout this whole crash last week, right? Now, here's another quick thing that I want to show. Very, very important. Let me get the drawing tool. And this is the simplest thing you can use in your trading analysis, okay? Look to see how the stochastics kept on going higher. So that would have kept you in the trade because it never came down to these levels here that we saw during this massive pullback. So there was a positive divergence going on, you can see here, while the market did this. So this margin sellout that I bought on Tuesday, okay? Clear, and I was watching this chart too. I didn't just look at one thing. I look at 60 different indicators and all kinds of stuff, and I use charts in 3 different platforms to make my determination. But I'm showing you a simple one. So here, if you notice, the stochastics only came down here, yet the market made a new low, new short-term low. So how come the stochastics didn't fall out and just go, crash down here? That's known as a positive divergence. A higher internal that shows that there is smart money buying or accumulation going on while the levels come and test the prior low levels. And here you had a higher, let me do this simply. So this was going higher while the market basically hit a new low right there, Tuesday. Margin sellouts. These big bars are these institutional margin sellouts. How come you never hear about that? That it happened between 3 and 4. I've been talking about this for years. You never hear that in the media. I don't know if you hear that from your other services, but that's what happens. That's what the money management business, and that's, margin clerks are vicious. They need the cash. They're not going to hold you. So bottom line is that this stochastics was showing a positive divergence while the market was market was making new lows. It made a new low right there. So right there was your trigger on the fact that this market was going to do things. Doesn't mean it was going to happen right away. There was a red candle here that we played on the short side, called it at the bottom. This was yesterday, and now this is where we are. Just give me a little flavor of things that I teach in my coaching sessions. Looking at the daily chart, it's actually a pretty, it's a bullish picture. That's real nice. So we're starting, the stochastics are telling us that we're looking to go higher. And at this point, I still think that we get towards the 2000 level on the E-minis. That's a 2000 and change on the S&P 500. Now, it's a swing chart. Probably happen by next week. In fact, I believe I'm putting down money. Obviously, I am because I'm a trader. That it will happen before Labor Day weekend. Keep in mind, seasonally speaking, and I've been doing this for a while now, and I've said this, they won't mess around with the market before Labor Day weekend, which is an economic issue. One of the largest shopping weekends, which affects everything from the U.S. consumer who runs 80%, 70% plus of the US GDP, and that has a ripple effect across the world. Thank you for listening. We have a long way to go. We are a long short service, so we can go short anytime we want at will.